Welcome back, traders and investors. We have Vlad Karpel on the line, founder of Tradespoon, veteran investor. How you doing today, Vlad?
Hello, how are you?
Doing good, doing good. We've had this low volatility environment here for quite some time. Market showing a little weakness today. We have a little bit of turmoil going on in Iraq. What's on your radar today?
Well, in a low volatility environment, we're looking to buy debit spreads. Since there is no volatility, selling out of the money call spreads, the risk to reward ratio is not there. So we're looking at the transportation sector, we're looking at the conglomerate sectors, and we are buying usually July, so 1 month out, debit spreads. So we're trying to have a well-defined risk-to-reward ratio. And we look at the by the we're looking at underlying option data. We're looking at implied volatility, and that gives us a probability where the stock is going to be by the end of July expiration. We try to buy deep in the money calls. So if the stock doesn't move, or if the stock moves a little bit down or a little bit up, we are making money because we're buying deep in the money, either call spread if we are bullish on a sector like transportation or conglomerate, or if it's like a discretionary sector and we find weak stocks, we buy deep in the money put spreads. That gives us, anywhere from 45 to 60 days time horizon. And as long as we are right on directions using our proprietary research, we are able to utilize, our strategy in this low volatility environment by doing debit call spreads or debit put spreads. That's been our strategy for the past 12 months, especially when the volatility is low, and it's been pretty successful.
Okay, you have crude here making a huge move based on what's going on in Iraq, and so I don't know exactly how that bodes for the transportation sector, especially the airlines. Are the airlines something that you're taking a look at, or are there other stocks in the transportation sector that are catching your attention?
Yeah, so we recently we recommended to our viewers Spirit Airlines, ticker SAVE, SAV, and Delta Airlines, ticker DAL. We also have a Trinity Corporation that builds railroad transportation, and those being our transportation. Also, UNP is another railroad company, and has been the four tickers that have been recommended our viewers in the past couple of months. So SAVE, SAV, the Spirit Airlines has been an uptrend and traded a low historical PE. Delta Airlines and railroad play are UNP and CRN.
Okay, so this little pullback here because of the spike in oil prices is not gonna make you reevaluate your position. This is a longer term position on, and you're just sticking with it.
Yes, we're right. Long term, we believe transportation is going to be an uptrend. We see a little sell-off here, and a lot of our subscribers do counter spreads. They buy out of the money, in the money. They buy in the money leads, and then for the short-term volatility, they will sell out of the money options.
Okay, all
We can
right.
sell out of the money call right now and buy deep in the money call that expires in January, and as long as we're correct on the sector trend, and the fact that this is just a short-term pullback, we'll be able to be successful in
Uh,
deploying
is
strategy.
is there anything out there that you don't like stocks that you're looking to do some put spreads on, or just outright buy puts?
Consumer discretionary sector has been on our radar. Uh, a lot of the companies like KSS and JCPenney, so Kohl's, JCPenney, things that depend on retail expenses. And so retail sector has been on our radar, and we recommended Kohl's and JCPenney put spread. Same thing, it's in low volatility right now, and buying deep in the money put spread that expires in July or August if the options are available. I think that's a great bearish play for the next 45 to 60 days.
So that's what you like to do. You like to go out, with 30 to 45 days. Is that usually your time horizon, for your options trades? Gives enough time to work, and if you're selling any of the strikes, then you're taking in some premium as well.
Definitely, give us more time to be right. So we have 45 to 60 days. That's our sweet spot, and we're buying deep in the money put spread because we're able to do it in a low volatility environment like this now, and it gives us high probability of being successful. We're trying to find 65% success based on the option implied volatility data in terms of the probability of being successful, and we're looking anywhere from 45 to 70% return on our investments based on the premium that we're paying for the debt spread.
Okay, and when you enter your orders when you're putting your spreads on, you enter them as exact spread orders. You don't try and leg into anything, I assume.
We usually put a spread order, but if you're more advanced and you feel more comfortable taking a little bit of risk, then yeah, we sometimes we do leg in into our spread also.
Okay.
But usually it all happens within a week period. We
Okay.
try to minimize the risk and reduce our cost basis, especially when you buy deep in the money options. So it only makes sense to do it within a couple of days if you're going to leg into your spread and sell the current volatility.
Is there anything that has you concerned about the market here? I mean, you do have the oil flying up, gold is moving up a little bit. We are pulling off, the all-time highs here. I mean, do you just think this is just another, dip to buy, or do you see any of your indicators, pointing to a more of an extended correction?
Uh, we don't think it's going to be an instant correction. We do look at the VIX, and VIX has been a multi-month low. So that's an area of concern. In the summertime, sell in May and go away is kind of been the theme for the past couple of years. So unless there is a prolonged geopolitical instabilities, we think that until the end of this year, we're going to be in continuing bull market. We might have, you know, small correction, but we think that S&P 50-day moving average will probably not gonna violate that support level, and that's the key levels that we're watching with S&P and VIX.
Okay.
So I think for your viewers, as long as S&P is at 50 days moving average and not dropping below 70-day moving average, we think we will sustain the long-term uptrend.
Do you put any different positions on, or have any different approach, during a rollover or during a triple witch? Is there any trends that you've noticed, or any particular strategies you try and employ during the expiration week and prior to?
We're during expiration, since it is volatile, we try to sell counters. So we would sell a call spread one standard deviation away, and we would sell a credit put spread one standard deviation away. And you can do an SPY, or you can do on, your stock that that has a certain trend. And
Okay, so your strategies are, they're not open ended with the risk, then, correct? I mean, if people want to employ these, strategies in cash accounts, you're not having any really unexposed legs, right? When you're putting in with these spreads, you're always coming in with a limited loss. Vlad? We have seemed to lost Vlad Karpel here, founder at Tradespoon. So we will attempt to get him back here.
We're attempting right now. I think he hung up on us.
Us, or would that be me?
Did you ask him
sorry,
a question he didn't like, Joel?
Vlad?
Yeah.
Joe. Yeah.
Hi.
Hi. Sorry. Bad connection.
That's okay. Don't worry about it. Do you have any charts in front of you if we bring up some individual issues to look at, or are you on the move?
I am on the move. I don't have a chart in front of me.
Okay.
But, this is a stock I'm following. I'll be happy to
Okay.
answer your question.
Okay. Well, just Live Deal Incorporated is getting a big pop here, but I'm not sure if that's one that you follow. Before we got cut off, we were just talking about going into expirations, different approaches, and you were covering that. Are you active in the momentum stocks at all? Do you like to play the Facebooks, the Twitters, the LinkedIn, the Pricelines, stocks of that nature, or are they just a little bit too volatile for you?
I think they've been a little bit volatile, especially lately. We do like a certain sector, guild, GLT in the biotech sector.
Mm-hmm.
That has been our favorite. And it did touch that 70-day moving average. And that's kind of give us up signal. Same thing with Netflix. There's certain stock where we have a long-term view, and we rate the stock based on the one-year horizon, based on their fundamental and technical data. So if we're bullish on the stock and there is a correction in the high growth stocks like Netflix or Guild, then we do like to take the positions and sell put spreads one standard deviation of where the support line is.
Okay.
That's kind of our team.
Kind of your general strategy of identifying the uptrend. Been doing anything in Twitter as of late? It's made a comeback. Wall Street's definitely defending that stock with multiple upgrades and finally got a little bit of life in it. Actually made the all-time low on the day that the lockup, the shares became available on the market. Have you been doing anything in Twitter?
Personally, I have not been trading on Twitter. I mean, I've traded Groupon and I've traded Facebook, and usually I would sell the premium, especially weekly. Sometimes it's a good strategy if you see that stock is overextended because of very high premium in these weekly options. You can sell a call spread or a put spread and a put spread on one standard deviation away and be able to collect anywhere from 2 to 5% on return on your money. So that's if you're more of an aggressive and speculative investor, selling the naked calls and puts or selling call spreads and put spreads one standard deviation away has been working pretty well for us.
Okay, all right.
But I would only recommend for someone who is experienced in trading options and never commit more than 3 to 5% of your capital to any of these trades.
Okay, all right. We've had Vlad Karpel here on, founder of Tradespoon, giving his outlook on the market and how to play with options. Vlad, thanks a lot for coming on today. We'd certainly like to have you back on again.
Thank you all. I appreciate your time and thank you for being opportunity.
Okay.
Thank you for the opportunity to be on your show.
Okay, we enjoy it. Thank you.
Take care. Thanks.
Okay,
Bye-bye.